anything since we started on this program from 2:30. Nikhil Rungta is Co-Chief Investment Officer at LIC Mutual Fund. Nikhil, good to have you with us here on Closing Bell. Thanks for your time. Prashant here. Could you, we were discussing Alco Bev companies before we took that commercial break. I see that you own Allied Blenders, a fairly recent sort of addition to the listed space in that sector. Can you talk us through your kind of thesis without sort of talking about the company if you don't want to, and why do you think this is a good place to be in? Lots of stocks have re-rated here actually over the last 2-3 months or so. Go on.
Hi Prashant, thank you for having me again. So I won't talk about the company, but on this sector we are bullish, and we have added a few names in this sector across the board. We are bullish on this primarily because we believe that the demand scenario is changing. A lot of political interventions which were happening are improving in this particular segment, and also from the geopolitical angle, from the country-specific perspective as well, we believe a lot of things are improving in this particular sector. So we are hopeful and we are bullish on these sectors that demand scenario actually is very good. India now is coming out as a very big consumer rather than just the manufacturer. So we are actually looking inwards from various sector perspective.
Nikhil, afternoon. This is Reema here, and thanks so much for joining in. What are the other sectors that you like right now that you're bullish on? And particularly wanted to get your thoughts in on exchanges. Do you own any of the exchanges?
So, Reema, good afternoon. Last time when I was here last month, I told you that we like consumption, pharma, healthcare, hotels, power, and discretionary consumption specifically. Was a structural growth story. We continue to like those segments. They are giving good returns as well as are defensive in their own segments. In terms of exchanges, yes, we do like them, but given the valuations which are there in this particular sector, probably we will be slightly wary. Last month, if you see our holding, we have some holding in these exchanges.
Okay, so yeah, I guess some of them are really powering through, going up and away. So just to talk about your take on the automotive space, because I noticed specifically in some of the small cap strategies, there is a fair amount of exposure to auto ancillaries. So Nikhil, what's the strategy there? And there's so much of sort of buzz now with EV, ICE, etc., hybrids. So how are you playing the whole auto theme?
So on the auto side, we believe auto ancillary will give better returns over OEMs. If you see in the auto segment, in the OEM segment, we are more bullish on two-wheelers over passenger vehicle, and that is being reflected in our portfolio as well. On the ancillary, why we are more bullish? Because what we believe is the aftermarket which is there is primarily part of these ancillary companies. And also emerging themes which are coming out in the picture, be it electric vehicles or any other, the charging stations, everything comes out in the ancillary space. So we are more bullish on the ancillary. We believe that the opportunities available in auto ancillaries are significant. OEMs, what you have to play are, there are limited number of OEMs which you have to play, and everyone have those OEMs. So where can you differentiate as an asset manager? Auto ancillary is where we believe we will differentiate for our investors.
Okay, all right. Hi, Nikhil. Good afternoon and good to see you in. This is Nigel on this side. At one point of time, when you talk about these ERW companies, these tubes makers, there was only one company everyone looked at, APL Apollo Tubes. And that stock did very, very well. But if you see from the recent peak, that's come off considerably. And the smaller players, JTL, High Tech, on a lower base, they are able to deliver growth, and they also have levers in terms of the EBITDA per ton. I've noticed that JTL is one of your investments in there as well. So your view on this space, and what kind of headroom does it have to re-rate from here on? Because barring APL Apollo, the other stocks, well, they're quite reasonably, in terms of valuations.
Correct. So, hi. what I would like to tell you without naming the companies, when these entities came into the market, the larger ones, the earlier ones, when they came, people were not ready to give them even a 20 multiple. And they were trading at 13, 14. Now they are trading at 40, 50 multiple or 35 to be precise. Similar is these smaller entities in this particular sector, which are trading in the range of 13 to 15 PE multiples. So there, I mean, what we believe is 20 should be minimum, which should be given to these guys. And if things pan out as they are expected, then they should also trade at a valuation of around 30, 35 like the larger players. What we believe is in these entities, I mean, given where the market is, given where the valuations are, the downside protection is significant in these smaller entities because the valuation at which these guys are trading at is very low compared to the larger ones. There you have significant amount of, I mean, the margin of error is very small in these larger entities compared to the smaller entities, and hence we are bullish on the smaller ones.
Okay, no, got that. The other one that I think we should talk about is Zomato. I think it's a sort of key name in your portfolio. Now, of course, in the large cap side of things, the Swiggy IPO is also going to come. I mean, I think the papers are being filed this week from what reports are telling us. Once that one comes in, what do you suspect happens? I mean, do you think already, I mean, off market, you're hearing all kinds of valuations and why that should trade at 30, 40 times higher because where Zomato is at? What would you do as a Zomato holder when Swiggy gets listed? Nothing at all, or you would diversify a little bit into that one as well?
So I won't talk about this individual script, but what I would like to tell you is like the valuation which is going on in the market is company specific, depending upon the business model. Like even for this entity, the priorities changed when it started buying Blinkit, and hence it's part of our portfolio as of now. Given that when Swiggy comes, what type of business model, what type of valuation they ask for specifically, that is when we'll take a call whether Swiggy can be part of our portfolio or not. I mean, right now what the valuation are going on is in the private market domain. When it comes to public market domain, the valuation is altogether different. I mean, in private market, you have just 3-4 buyers and a couple of sellers. In public market is the entire stock market, which is the buyers. So you need to give the valuation which is required by the public rather than just 3-4 guys. So we'll have to wait and watch what type of valuation and business models we give presence to the investors.
Okay. Finally, Nikhil, before we let you go, we noticed quite a few of your portfolios. Obviously, I have HDFC Bank as one of the top holdings, and you also have some other players like Shriram, I believe, among the others, the bigger ones. So just leave us with your approach to BFSI. Today is a big day. It's all about Bajaj Housing Finance. And it tells us, right, the market is still willing to go out and pay top dollar for good BFSI franchise. So what part of it do you like?
So see, first is in terms of lenders, we like NBFCs over banks because of the rate cut cycle, which will creep in very soon. Second, in terms of lenders and non-lenders, we like more of non-lenders, specifically the insurers, the wealth managers. So that is where we are playing out as of now. In banks, we are waiting for some green shoots, which will come in picture very soon. So there we have an issue of deposits. Your deposit growth is struggling. You have an issue on your CD ratio, which is coming off. So those lot of things are playing out on the banking side. Your margins might be under pressure once this rate cut cycle starts. So NBFC is what we are bullish more on over banks, and on the banking side, we like to stick to just a few of the larger names where we see lower downside.
Okay, Nikhil, thank you very much for joining in. That's the view from our Alpha Manager for the day.
Thank you for watching CNBC TV18. For all our top stories and news updates, follow us on our social media platforms.